I think markets feel like the worst is either over or being communicated right now. And it's interesting because, of course, we saw the negative GDP print for the quarter. And that was basically in line with what the Atlanta Fed Now model had said about this quarter. It's actually a little bit better than what they had said in terms of what the drop could be. And if you add that to the fact that there might be communications between Beijing and the White House, and of course, the who blinked first element is also in play there, and bring that into the fact that the Fed's going to talk next week probably about how growth has slowed, not necessarily will they cut rates, because there's still, the idea of tariffs looming and inflation looming, but opening the door to doing something with respect to the lower GDP figure. So if you put that all together, what markets ultimately want is for the uncertainty to go away. And if you have a number of signs that indicate it's either gotten to its worst point or it might be waning, the markets are taking that with an optimistic upward motion.
But it feels like there's still so many ifs in this equation here. If we see China and the U.S. come together, if we see deals come through between the U.S. and the other countries that have been given this delay, and if the Fed acts to cut rates, and if those rate cuts actually feed through to the economy and improve the growth picture. So to my mind, investors are showing a degree of complacency here, given how many ifs are still on the horizon.
There's definitely all those ifs, but I think what investors are doing is saying, all right, but can it get worse? Is the downside of the ifs worse than the potential upside of the ifs? And what's basically happening is sort of that risk on momentum is entering the market as a result. CEOs right now are coming in and saying, look, we've had to sort of reduce our expectations of growth, of CapEx investment, and so forth going forward, because we don't know what's going to happen with tariffs. So the expectation is, will we know more in 3 months from now? Will we know more after this sort of post-Liberation Day pause goes away, or will it get worse? We don't know that right now. And I agree, there is some complacency about what could happen. But the expectation is that the bad news, or the worst of the news, is coming into the markets right now. And if the worst of the news makes the Fed ultimately cut rates more quickly or buy more than they had forecast in December, even at the last FOMC meeting, then that indicates that any of this waiting on investment, even in this period of uncertainty to the markets, could be met with lower cost of capital, could be met with, that's sort of more of a liquidity boost. Whether that happens or not, yes, is still a big if. There could at any moment be an additional downside between any conversation that happens between China and the United States with respect to tariffs. There's no out of the woods yet, but there is a feeling that the markets are saying, all right, well, maybe
Right.
the worst is over. We can't get worse than
Nomi,
145% tariffs between countries right now.